Thanks very much, and thanks very much for the invite. It's nice to be with you all this morning. As Brian mentioned, Sean MacHale is my name. I'm a partner at EY. My background is investment banking and capital markets, so I'm not an auditor. So when I look at the whole area of climate change, sustainability, it's really from the point of view of repivoting and reorientating capital flows, which is as prescribed under the EU Green Deal. I suppose to maybe take it back a little bit, this is very, very new, as Tony mentioned earlier on. It's really when you look at 2015, the Paris Climate Agreement, 2018, the EU Green Deal, that really a very significant focus came on sustainable finance, transition to the low carbon economy, and what that would mean. And of course, my background is numbers, and I deal in numbers all day long. So to put some numbers on it, we're now looking at trillions of euros. So the IEA puts a number of 4 trillion a year required just for the energy transition to the low carbon economy. Currently, we're hitting about a third of that funding. When you look at Ireland in the context of what's required out to 2030, the IMF have put a number of 20 billion of expenditure to 2030, 2/3 of which will have to come from the private sector or the financial services sector, and of course a large portion come from the state and obviously the EU through the various mechanisms that they have. In terms of the asset management community and how that's going to grow and develop out, you're looking at sustainable finance accounting for about 50 trillion by 2025. And to put that in context, that's over a third over they estimate global assets to be. Currently comes out at about 141 trillion. So as you can see, significant amounts of capital required, significant amounts of capital available, but capital can only move if we have the right structures in place. And the essence of the right structures is having the right reporting architecture and framework. So roll forward from the EU Green Deal, and what you've seen the EU do was create the classification system, which is the EU taxonomy. It also has disclosure requirements, particularly for financial market participants under Article 8 in terms of eligibility. We're going to see alignment, we're going to see green underwriting ratios, green asset ratios. And then as part of that architecture, it's created very, very specific reporting requirements depending on what you are. So from a financial services perspective, we look at things like the IDD requirements. We look at SFDR, I'll stop using acronyms, Sustainable Finance Disclosure Regulation, which is obviously governs financial product. Article 8 and Article 9 is what they're affectionately known as within the asset management community, but that basically classifies green product. If you look at banks, they now have to report under what's called Pillar 3, and there's a whole E, S and G template that they have to fill out on a qualitative basis, and then they have 10 quantitative templates to fill out. And why am I mentioning this? So we talked about CSRD earlier on. CSRD is fantastic. It's going to bring a huge amount of transparency. The whole introduction of limited assurance is hugely welcome. I spend part of my time doing pre-assurance, limited assurance on a voluntary basis. It's a very, very difficult topic. So now having it there formally in a standardized way is a fantastic move forward. But why these things are important is that they're already being built into the credit process. You want to borrow money, doesn't make much of a difference who you are. Going forward, this is going to be part of the credit assessment. It already is part of the credit assessment in a very light way, in a tangential or a qualitative way, but now it's become a much, much more formalized. And in order to run this, and what's really interesting from our perspective on CSRD is not that the banks, the asset managers and insurance companies will all have to disclose, it's how they're going to consume that information, how they're going to analyse that information, and in turn then how they're going to take that information and push it through the credit process, which now obviously has sustainability and ESG considerations and matters at its very, very core. And of course that goes across all financial services. And as everyone appreciates, this has been iterative and built out all the time. So now we have new things like carbon accounting. I have 2 people on my team, that's all they do, carbon accounting. PCAF methodology, coming in testing scope 3, looking at data sets which are fragile but evolving very, very quickly. And I suppose whether you want to look at it in terms of the good or the bad news, this is going to move on vastly, quickly with the move to nature and biodiversity. And again, to give you some numbers, over half the world's GDP is either moderately or severely affected by biodiversity and nature. It's something that we're not really talking about at the minute. The TNFD, or the Task Force for Nature and Financial Disclosure, has brought out its 4th beta version. It'll bring out its first framework in September of this year. And quite quickly, you'll see financial services players, large corporates move to that. And again, maybe to put some context on it, if you look at the shelf at home, and if you're unfortunate to be on Lipitor or atorvastatin or any of these kind of drugs, or someone in your family has cancer, over 50% of all those drugs come from the natural environment. So when people think of nature, they think of tourism, farming, agriculture. Absolutely, they're all the things you see. But look at some of the other big industries like pharma and how dependent they are. And again, look at what that means for them from a risk, a revenue, and a profitability perspective. So again, you're going to see all these things come to the fore. And again, you need proper frameworks, reporting and disclosure requirements. And that is what the EU has done very, very well. And of course, it would be remiss of me not to point out that was at the request of financial services. So again, when you hear financial services complain a little bit, and I come from that industry, you got what you asked for because you couldn't classify until we had taxonomy. You weren't sure what was green until disclosure guidance was given. And of course, in terms of Article 8 and Article 9, if I want to put my money to good causes and make a financial return, well, now I can see what products fit that criteria and classification system. So what's extremely important is that we have enough people. So I've been talking about education for 3 years now, is that we need more and more people coming into the space, more and more people who have the skill sets, more and more people who understand financial reporting, because obviously CSRD quite clearly is going to put sustainability reporting on an even keel with financial reporting. And of course, those people who understand that I'm not trying to put a square peg into a round hole. I'm not solving for output. I get asked all the time behind closed doors by boards, what does good look like? And the very simple answer in terms of good is good can only come if you're actually doing things, if you're doing it under a robust framework. And again, what we need is the finance community, we need the accountants to all upskill, so again, that we can bring that rigor and discipline to it, because otherwise the money quite simply cannot flow. So from my perspective, it's really, really important that we accelerate this out. Obviously, we look at the public-private partnership piece, and of course then, and only then, will we have the trillions, which effectively now are required, that'll move into the space. I thought it interesting your remark in terms of, when you look at the 200 odd billion, you found 72 billion, I think was the numbers, and that we have an expression that we use again at audit committee, striking but not surprising. And again, we're finding this over and over again. But the good news is it's improving all the time. But what's essential is that the reporting frameworks are built out, that they're iterative on, that we get to limited assurance as quickly as possible, and of course reasonable assurance in due course. And of course we have enough of professionals to bring it forward, because again, there is quite a gap at the minute in terms of available resources vis-a-vis demand for those resources, and obviously Orla mentioned that earlier on. But happy to take any and all questions you might have. That's just kind of a snapshot of what we do, but happy to go into any and all these areas through the Q&A. But thank you, and nice to be with you this morning.